Welcome to Wealth Management Mixtape, a go-anywhere show about life, finance, and investing. Join Jake Heisler and Tim Miller as they talk about what they're reading, writing, and experiencing. Jake Heisler and Tim Miller work for Quaker Wealth Management. All opinions expressed by Jake and Tim or any podcast guests are solely their own opinions and do not reflect the opinion of Quaker Wealth Management. This podcast is for informational purposes only and should not be relied upon for investment or financial planning decisions. Clients of Quaker Wealth Management may maintain positions in the securities discussed in this podcast.
Nope, not yet.
Cool. Yeah, the background looks good. You know, it's like you don't.
Not a fan of Tiger Woods.
You see that in the background? Oh, you can. Yeah. That's prevalent.
Yeah.
I know all I need to know about you. You got a signed baseball back there. You got,
Not signed. It's actually from the opening day of Citizens Bank Park.
Oh, yeah?
I just found it. I haven't opened it since, I guess I've never done anything with it. When did it open? 2002?
I have no idea.
Something like that. But yeah, it's been there for that long.
Was it a foul ball?
I do not know. It just says opening day on it, and I got it from like somebody in the Phillies organization.
Written in crayon? It'll be $1,000, please. Cool. All right.
2004.
Nice. Cool. So you looked over the agenda, right? Yeah. Cool. All right. How do we start this?
Yep.
How do you want to, why don't you kick it off today? You'll be our kickoff.
I got to pull up the agenda. Nah, just go ahead, kick it off. I got to pull it up. Oh, here it is.
Today's episode's brought to you by ChatGPT. Everything we say today was written in advance by ChatGPT. Or it could have been.
It could have been.
Right? It wrote for us in a satirical way in the voice of Joe Rogan. So we sound a little like podcast veterans. That's why.
Should we actually write out our entire podcast script for the next episode through ChatGPT?
Sure. Let's give it a shot.
Yeah.
You know,
see what kind of feedback we get from the audience on a ChatGPT produced episode.
Yeah, we're going to talk about that a little bit later. That seems to be the topic du jour. I'm curious to hear what you think about the long-term impacts of that. So we'll discuss that a little bit later. But I thought, look, we haven't talked about the Super Bowl since the Eagles lost, unfortunately.
Yeah.
What did you think?
I mean, I was thinking that they were going to win by 10 points, and if the defense had done their job, they would have won by 10 points because the offense put up 35 points. I didn't think they would score that many points. I thought they might get to 30, but putting up 35, and honestly, they could have almost put up more. It's just the collapse of the defense, and there's a reason why the defensive coordinator decided to leave. I mean, he wasn't well-liked in Philly, and he knew that, and he took a head coaching job for less money. Although it is a head coaching job.
Yeah.
He's got good personnel, and he's been here with the system, and you never know. But
yeah.
I don't know. Still disappointed about it. Haven't really talked about it. But, that has to be one of the most painful losses I've ever endured as a fan in almost 30 years. And, the future's bright for all the Jalen Hurts doubters. They were put in their place this year, even all those Eagles fans who doubted them. And we'll see. I was actually reading something the other day about there's a running list of quarterbacks who lost the first Super Bowl they appeared in, never made it back to the Super Bowl. Donovan McNabb right? Being one of those quarterbacks.
Yeah, I think first off, first of all, the field, I said when I came into the office after the loss that Arizona should vacate their team, right? You can't have a field that's that awful. And then I heard that the Super Bowl next year, 2024, I guess it would be, or whatever, 23-24 season is in Vegas, and it's the same turf. So
Really?
Anyway, that was just, if the topic of conversation during the game from the commentators is how poor the grass is, that's bad.
Yeah.
And then I think that actually favored Kansas City because our defensive line was known for getting to the quarterback, and they didn't have much footing. So it was like what was normally a decent game plan, despite what you felt about the defensive coordinator, really, I think might have impacted them in a negative way. So,
yeah,
not that I'm blaming it all on turf, but that seemed to favor the opposing team a little bit.
Yeah, I know. All of us Philly fans try to think of ways to rationalize the loss, and at the end of the day, it's just the greatness of Mahomes and Travis Kelce and Andy Reid. I thought that we were, extremely outcoached. Andy Reid.
Yeah, on the defenses, their offense against our defense, for sure.
I mean, the two of the touchdowns were wide open. If you think about it, the offense had a great game. Jalen Hurts had a great game. It was one of his highest rated games he's had in his career. But the one thing that stood out was the lack of defense preparation for Andy Reid's offense, and we should know what's coming, right? He was here for so long. We should know more than most of kind of the system that he runs. But really what let you down was defense and special teams. Special teams, they were bad almost all year. Never improved. Yeah.
Well, look, you come away from the season. I didn't have high expectations going into it. So I came out of the season with, we've got a good head coach, right? We've got a great quarterback. We've got a pretty good young core, especially in the offensive side, right? You've got a good defensive line, even though you're losing a couple parts. There's not many holes to fill, even with the free agents, and we've got draft picks. So you got to feel pretty good as a Philly fan coming out of this, even though it was a heartbreaker.
Yeah. I will say I'm a little worried about the free agent situation because Fletcher Cox might be gone, Jason Kelce might be gone, but then the younger free agents is Hargrave, Bradbury, T.J. Edwards, Gardner Johnson. There's some big names there, so it's who do you keep, who do you let go? It'd be interesting.
It will be interesting. We'll see. I thought one thing that was funny is it was a post by actually a financial advisor who said that if you had invested $10,000 in the 2022, so last year's Super Bowl advertisers, this is how much you'd have today. So if it was FTX, you had nothing, right? Carvana. So these are the biggest Super Bowl advertisers last year. Carvana, about $900. Vroom, I don't even know what Vroom is. That's $1,700. Coinbase, $3,600. DraftKings, $7,400. Rocket Mortgage. All right, that's not awful. That's $7,800. Salesforce, $8,000. GM, $8,400. And Meta, or Facebook, $8,700. So I thought that was a funny post. George Morautis. Is that how you pronounce that?
Yeah, looks like it.
Shout out to George Morautis. From.
Do you think anybody invested in the Super Bowl advertisers portfolio since last year?
There's probably an ETF for it somewhere.
Obviously,
create it.
Yeah, maybe this guy created it. We should create one every single year and just track how it does. Yeah,
every advertiser, if they're a publicly traded company. It's a good idea.
Yeah.
Follow along. It's a guaranteed way to lose money.
This year would be a lot of, I was so focused on the game, but it would be a lot of alcohol companies, wouldn't it?
Yeah.
This was the first year that was Anheuser-Busch. They lost exclusive rights to the Super Bowl. Didn't they have exclusive rights or something like that?
I don't know.
And they lost exclusive rights, and now all the alcohol companies were flooding into the advertising for the Super Bowl this year.
Yeah.
I don't know where. I read that somewhere. Anyway.
Gotcha. I didn't see a Dessois commercial yet. No.
Coming in 2023. Or should I say 2024? We
should talk about not Katy Perry, but we should talk about, oh my gosh, she was a Super Bowl halftime.
Rihanna.
Just her business acumen to set aside the halftime performance, right? But the like she's a billionaire, legitimate billionaire. I didn't realize that with her makeup line and stuff. But it wasn't like that wasn't her first venture. Like she had been doing things since the early 2000s. As soon as she came onto the scene, so it's pretty cool if you see her history from where she started to becoming a billionaire.
Yeah, she's got a really cool backstory. And
then there's an incubator that it's specific around like beauty brands. Have you heard? Do you know this?
Which incubator?
I forget the name of it now, but it's anyway. If you go to their site, whoever they're working with currently is prominently displayed, and so she, like they were doing a comparison between Jordan's deal with Nike and her deal now with this company, and like he makes $270 million today per year, right?
It's wild.
But if she had the same economics that Rihanna had, it'd be like he would make like $1 billion a year. So she got a really good deal from this. Anyway, it's interesting. We should talk about it in the future. We had on here a couple different. Why don't you talk about the first article that we put on here?
For the a practical way at looking at investing over different time periods.
Yes, I think it was from our close friend Ben Carlson.
Yep.
I will tag on this.
So
shout out to Ben Carlson. He's always been a proponent of long-term investing. I think that's and he's always stuck to his guns. I don't think his background was anything but looking at things from a long-term perspective. And these types of articles are always good as a reminder that that your time horizon's almost always long-term. And if it's not long-term, then really I'm not sure the stock market's the place to be. And sometimes the bond market's not the place to be, as we were made clearly aware of in 2022. But I think his point in this article, I'll let you talk about it.
Yeah, I was going to say, I think this article where he looked at specifically 10-year, like S&P 500 rolling 10-year returns, S&P 500 20-year and 30-year rolling returns, to your point, I think it enforces more than anything I've really seen before the importance of long-term investing. And we have another article which also enforces the fact that people who build wealth, they rarely trade. They're like the lowest 10 percentile of actually trading those assets or those equities. So I guess it just enforces the long-term buy and hold strategy, which is, we always say in our field, is to be diversified, and we're not traders but long-term investors, and that kind of reinforces that point. But looking at it, where he goes and he talks about the 10-year rolling returns, it's actually, I guess, it says even over a decade-long time frame, there was plenty of volatility in returns. The best 10-year annual return was 21.4%, and that was ending in 1959. The worst 10-year annual return was a loss of almost 5% per year, and that was ending in 1939. Obviously, we had the Great Depression. So following the Great Depression, leading up to World War II, it makes sense that was probably the time period where there was extreme volatility in the market. Going on to the best 20-year annual return was more than 18% per year through the early 1980s, and the worst 20-year return was a gain of less than 2%. So once you get to 20 years, in the worst 20-year period, you're going to be positive. You're never negative over a 20-year period. And then if you look at, I also thought was interesting about the 20-year, it says, one of the neat things about the distribution of returns over 20 years is that almost 90% of the time, annual returns were 7% or higher. Annual returns were 8% or more 75% of the time, and they were 10% or higher 56% of the time. So in a 20-year period, more than 50% of the time, you're going to be 10% per year or better. I thought that was pretty powerful.
That was my take. The vast majority of the time, you are positive, right, in any 10-year rolling period of time, barring some outliers there. And if you happen to catch the worst possible environment, it was negative, right? But most people's goals aren't 10-year goals, right? They're longer. Even a retired client is retiring at age 65, and if the average lifespan is 20 years or 85, so 20 years of retirement, let's call it, and the odds go up as you get older that you live beyond that. So let's call it maybe 95. So your retirement's between 20 and 30 years. So even though I think retirees tend to make this mental shift in retirement that they have to be more conservative because they're drawing on their retirement assets, the reality is that they need to still have some level of risk in the portfolio. And this is just a reinforcement of that idea that if you take any long-term time frame, I think the 30-year, the worst possible total return was like 850%, right? It was something outrageous like that. So 7% per year or something.
Yeah. It says the worst 30-year return over the past 100 years was a total gain of 850%.
Wow, that's just wild, right? So, yeah. But patience is not a strong human attribute. So we get locked into these kind of even daily moves, or even looking at it from year to year is almost silly in the grand scheme of things, right? We do annual reviews but we also try to reinforce the long-term aspects of almost all goals. And most of the time it's retirement. And so if these are the numbers, it's always good as a reminder that most every goal is long-term, and not just 10 years. It's 20 or 30 years, even if it's retirement.
Yeah, maybe this is something we should start incorporating in client meetings, is showing the rolling returns of 20 and 30-year periods.
You don't think people would walk out of the room?
They might.
Yeah.
But there's only so many ways you can explain to somebody the value and impact that long-term investing has on a portfolio. And I thought Ben Carlson did a great job kind of reinforcing that idea and showing the different time periods with the different averages associated with them. Like I said, for the lowest annual return for any 30-year period was 7.8% per year.
Yeah, that's the worst case.
That's the worst case over 30 years, is you're getting over 7.5% a year, which for most retirees, if you're going to be thinking about the withdrawal rate on your retirement assets, most people are not taking 7.5% withdrawal on their retirement assets. So what this shows you is, obviously you're not going to be 100% equity, but having risk in the portfolio is crucial to not outliving your assets.
Which kind of leads us to the next topic, which is, you'd be surprised, I think most people would be surprised to learn that the wealthiest people in this country, at least, have a majority of their investable assets in stocks, even into retirement, right? So it didn't matter so much the age range. It got a little more conservative as folks got older, but not as much as you think. So, they have that old rule that occasionally we'll hear from our clients about, which is you should have a percentage of stocks that equals, or a percentage of bonds that equals your age, right? So if you're 30, you should have 30% bonds. If you're 60, you should have 60% bonds, and so on and so forth. But the reality is, how do the wealthiest folks in this country actually allocate their investable assets? And that was around 60% stocks.
Mm-hmm. Yeah, now the fixed income allocation prior to 45 until 65, so let's just say from 35 years old to 65 years old, in that 30-year span, your fixed income allocation is going to double. But by double, we're saying it's going to be less than still 30%. So most cases, even at age 85, some of the wealthiest investors, they're still 60 to 65% equity, which is, and we see that with folks who come in here and, some are more aggressive than others, and we can kind of tell the difference of somebody who's been equity, for a very long time and remains in an equity position versus somebody who's shifted more conservative earlier on.
I'd be interested to see why there's a split in the average investor in retirement and wealthier investors, multimillionaires. I think that was Nick. I forget his last name. Matt. Can you read his last name there, Tim?
Yeah.
I think he's
Nick
of Dollars and Data.
Morodis.
No, I don't know. Anyway,
Sorry, that's George Morotis. Oops.
Yeah. No, I think it's somebody else. It's all right. We'll cut this part out. But that's ofdollarsandData.com. So ofdollarsandData.com, and then Ben Carlson's a wealthofcommonsense.com. Both great blogs, I think, to read pretty consistently. Here's what I came up out of this with, that the wealthier you are, the more you think about generational wealth, right? So you're thinking about, well, there's no way I'm going to spend this $20 million. So I have to be cognizant of the next generation, right? So if my time frame's even longer, right? It's not 30 years anymore. It's 30 plus the lifetimes of those folks behind me, right? My kids or whoever is inheriting that wealth. And so if that becomes your new mindset, then why would you get more conservative, right? You're not going to, there's no way you outlive your money. And so in order to make it as good as possible for the next generation and maybe beyond, you stick with your allocation, because you know stocks outpace bonds over time and bonds outpace cash over time.
Yeah, I'm sure that's a big reason why the allocation for wealthier investors is what it is they're not thinking about it in terms of their lifetime anymore. They're now thinking about it as the next generation. So if you're 70 years old and you realize, hey, I'm never going to run out of money, I'm never going to spend through my retirement assets, you're now thinking about your 35 or 40-year-old children and investing it for their retirement timeline. Right.
Which takes you to the other side of the spectrum, which is people that have kind of scrapped together savings over their lifetime, have enough to retire, but maybe not enough to give a significant inheritance to next generation. Their mindset about investing is going to be different, right? And they're going to approach it from a perspective of, I can't afford to lose money in a big downturn, because that might actually impact the next year's budget, right? And so, we have the conversation all the time that it's okay to be more conservative if your lifestyle isn't dependent upon higher rates of return. And so maybe at that point it becomes more important for somebody to have peace of mind, sleep well at night, than making the maximizing investment decision every time. Because we know stocks are the only asset class over time that outpaces inflation, right? So it'd be easy for us as advisors to say, yeah, well, just put 60% or 70% of your portfolio, heck, 100% of your portfolio in stocks, you'll be fine over time. When people have to watch the balance of that fluctuating up and down. So there's probably a dichotomy between folks that have just saved enough to retire and folks that have significant wealth and there's no way they're going to spend that down. Just a thought.
Absolutely. You want to start talking about your experiments with ChatGPT?
Well, one thing I wanted to say, the last part of that article was that you'd think that the wealthier the person is, the more they trade, or the more they make changes to their portfolio. And it was actually almost the exact opposite of that. There's very little turnover in their portfolios over time. So you take those two articles and you put them together, it's, well, your time horizon is much longer than you probably think it is. And you don't have to make a ton of changes over time to accomplish your goals, right? That was kind of why I thought those two articles worked really well together.
Yeah, and it's saying like less than 10% turnover in the portfolio, so it's showing that they're not traders, but a rebalance is still healthy for a portfolio over time, or once a year, twice a year, but not trading every single day. So the turnover ratio is low, but that's still inclusive of annual rebalances and things of that nature.
Right, exactly. Yeah. Now, if we asked ChatGPT to build us a perfect 60-40 portfolio, it wouldn't do it. I'll tell you that right now. So it makes no recommendations around investing. There's ways of tricking the system, but it's not going to build you the perfect 60-40 portfolio if that's what you're hoping it would do. But it's the topic that everyone's talking about these days. And Microsoft, of course, invested heavily in ChatGPT, and its Bing search platform is now delivering some of the results of ChatGPT related results. Should we talk about what it actually is first?
Yeah. Why don't you give it the background?
I'll do my best, yeah. So it's a form of artificial intelligence that, in essence, searches the entire history of the internet. I think it's prior to 2021. I mean, that's the rule now. And delivers answers in a easy to read way, and can pull from different voices or talk about concepts in nuanced ways, from the code that it kind of drives ChatGPT. So it's a long time in the making, right? It wasn't like this thing was out of the gate this impressive. But I'll give you an example. So I had I said ChatGPT, you just type in your scenario. I said, bond investor talk to a stock, or have the bond market talk to the stock market about the weather, and in a dialogue. And so it would talk about the bond market preferring to use umbrellas and the stock market not. It'd rather take a risk, and kind of like seeing thunderstorms roll in over the horizon. And it was this kind of battle between playing it safe and being more risky. And I didn't prompt it in any other way. It came up with the idea, the concept. I didn't tell it about umbrellas. It just brought that up, or thunderstorms. It just brought it up. So it's pretty intuitive in that regard.
Does that scare you in any way?
In what sense?
Just how advanced the AI actually is. Like, if it gets in if somebody's looking to do something negative with this type of artificial intelligence, don't you think they can trick the system or get it to do things that assist them in whatever they're trying to do that's negative, whether it's a cybersecurity hack or any of the other things that, artificial intelligence can assist people with? It can code, it can do a lot of different things, but just its ability to, take what you put as an input, which is very limited, and come up with this whole story about, stocks and bonds and the difference between the two. It's pretty incredible to me. I find it an amazing tool, but I also am a little bit concerned at the same time, as I'm sure most people are.
Yeah, I guess the concern would be there's fail safes built in, right? I can't ask for it to predict what stock's going to go up, but it can help you write code to figure out algorithms that would predict certain movements in stock prices, et cetera. But that's already happening, right? There's already AI that's programmed to do that. I think with any technology, whether it's the internet or it's blockchain technologies, there's always going to be bad actors, right? So a criminal, is going to harness this to its advantage, just like a criminal would harness blockchain technology or the internet to its advantage. But ultimately, there's more good than bad. I think this leads us to a path of hopefully more informed and balanced information, intake by people, right? If you're asking about, not to get political, but to ask about the best or worst qualities of the current administration or the previous administration, this is pulling from a balanced perspective. It's not conspiracy theory driven, right? And maybe to that perspective, it's a positive thing. I think the question that I always ask is, or what I see written about is, well, what does this mean for students? Like,
that was my next question.
Yeah. What if it was around when you were in high school, right? How easy would writing that paper be? You could literally ask the exact question that the teacher asked.
Yeah. I guess it would help you out with assignments, but actual test taking or SATs or any of those other things, it's going to catch up to you sooner or later, right?
Yeah, you'd think. And look, this is new technology is not new. There's always new technology. I think back. I took Latin in high school, and then took Latin again in college. I have no idea why.
Passion for Latin.
There's no passion behind it. But I always thought, man, it'd be so if there was like a translation thing, because that's all Latin was. You took Latin text and you translated it. You didn't speak Latin, obviously. so it was a translation from Latin to English, and it was tough. I mean, Latin's a very complicated language, but it'd be simple with a translation AI, which there are plenty of now. But so this is not on the students, right? Like this shouldn't be a monitor of the students. It should be like any other technology. It should be the onus is on the teacher, right? So they've got to change the way that they teach or ask questions, as part of homework assignments or tests.
Yeah, because I mean, even in my time in high, I guess it's like the tail end of high school, beginning of college, but there was different technologies coming out. I think one was called like Turnitin, and basically what it is, it scanned for plagiarism. So it would reference all these different, I guess, publications, and it would scan for plagiarism and highlight things that were questionable in your writing if you actually were plagiarizing. So there has to be some type of new technology that is coming out to combat the use of ChatGPT for, English essays and things of that nature. But you're right. It's not on the students. Like, I'm sure when the internet became a huge deal in the 90s and early 2000s, there was a lot of onus on the school systems and the teachers to find ways to navigate all the concerns they had at that point in time. So
I do wonder how this impacts like art a little bit. So theoretically, I should try this, but you could have ChatGPT write a poem in the voice of Walt Whitman about whatever it is, a duck on a pond or something. And it could do it.
What do you think is the most affected industry?
That's a great question. I don't know. You have any thoughts on that? I mean, it's not finance. Look, it's the beginning stage, right? But I think it is pretty dynamic. I don't think from a profit standpoint, I don't know. I think here was my initial takeaway from ChatGPT, another AI. This is all just kind of commoditizing humans. It's just an odd, it drives us to search. So it drives us to search engines, in this case, Bing, right? But Google has Bard, B-A-R-D, which will be their version of ChatGPT. It failed its first test, but I will almost guarantee it's better than ChatGPT when it's available to the public. That would be my guess. Google's been working on this for ages. Amazon's been working on this for ages. But it's all to drive eyeballs to a screen, right? So that's how it gets that's what I mean by the commoditization of humans. It's like we become the commodity, and the whole focus is to get our eyes on a screen. That was my initial takeaway. Was this is just it's a ploy to get you into Bing, right?
Yeah. Yep.
And that's how they generate ad revenue.
Well,
so I don't know. I don't know what it impacts the most or the least. I think it's just like any other technology that industries will adapt. I think writing will become more efficient. I think you'll know really quickly who's not using it, right? If there's incoherent things going on, why not pass something through an AI filter to say, hey, make this sound. We use Grammarly in our office, right? So that corrects poor grammar or makes suggestions on phrasing of sentences. It's still your work, but it's just making sure that it doesn't sound, like an idiot wrote it, which most of us are in the office anyway. But so I think you'll realize quickly who's not using it. If that makes sense.
Even like there are times where maybe they didn't tell it to do the correct thing, but there are like generated responses through ChatGPT. And there was some university I was just reading about this morning. I forget. I think it was in wake of.
Oh, it was Michigan State.
Michigan State, right? In wake of the shooting. And they used it and they came out and said, we apologize for using the ChatGPT automated response, and it lacked empathy, right?
Oh, sure,
So maybe it sounded like a little bit of a robot writing it, which is exactly what it was artificial intelligence creating a message that really should take the school all of under 5 minutes to craft that message themselves.
Right.
But we'll see. And talking about industries that I think will be impacted, I was going to ask you, and I don't know the capabilities on this side yet. Obviously, I think people who are in like coding, they could be impacted. This is just going to replace what they do. And you're still going to need a human element to some degree. But like, what is the capabilities on the design end of things, like creatives and things of that nature?
Yeah, I don't know the the names of the AI, but maybe it is an extension of OpenAI, which is ChatGPT. I don't know. I mean, that's a good question, right? I could with AI, you could write a screenplay based on a book, right? As long as that AI has access to the text of the book. And you could write it in the way that M. Night Shyamalan writes his movies, right? Or in any other great director. So it's going to be interesting how that affects. Or you can tell it to paint a picture in the way of Van Gogh or whoever else, literally anything. Where it becomes effective is, just from our perspective, from a financial services perspective. Look, we write blog posts and things of that nature, but we talk to we're always trying to find an image that is the headline of that. Well, now you don't have to, because here's the article. Come up with an image that you think would be suitable for this article, and it might be a completely original image, right? That to me is cool, but I don't know how creative folks are going to take it. I think there's this new level of confusion when it comes to art and art related industries.
Think about like graphic design. Say you have a company with an outdated logo. Could you paste the logo and tell ChatGPT, say, hey, come up with a redesigned version of this logo? Do you do something like that, or is that not possible?
Yep, you can do that.
It's unbelievable.
No, it's incredible. It's not ChatGPT, or maybe it is, and I'm speaking turn, but I can't remember it. I was actually on the site probably about, 3-4 months ago with that can create any image you want to, in any style you want to create it in. It's just incredible. So you can have AI that builds websites for you, right? And it's going to pull from all the keywords, Google keywords, to make it like the perfect website and the perfect landing page. So you drive the most traffic you can to the paywall, which is, to create as many. So it's going to put efficiencies in, I think, in a lot of places. And that's what I mean by you're going to figure out who's not using it, because it's going to be, you're going to realize that, oh my gosh, almost like if we look backwards and we see, it's the best example I can give, but if we look backwards and we see, oh man, that's an old website. Like, when you see an old website and you're like, how's it possible this is the site they're using still? I think you're going to see that in form of maybe websites too, but other text and other things. Like, I can't believe they misplaced a semicolon or something like that. You're like, how's it even possible today? Yeah. There's poor grammar in a sentence, or this rambling went nowhere in an article. Like, it's going to get solved somehow through programs like this. Yeah. Interesting.
Absolutely.
I think the last thing we had on our agenda today was talk about angel investing.
Yeah. Do you want to give us an update on the syndicate?
I'm our angel investing director. Well, no, I think it's definitely changed. So it's interesting. I do a little bit of angel investing throughout the course of the year, right? It's just, I don't expect to get anything from it. I'm hopeful that I do. For me, it's actually a way of learning about kind of the technological changes in certain industries. It's pretty interesting stuff to me. And I'm part of a couple of different groups that have access to some of these founders. By the way, that's going to get automated by AI too. I mean, their pitches are almost identical. It's pretty not laughable, but it's obviously a formula that works. Yeah, and it's always Bob. Let's see, Bob. Bob is a business owner who has trouble managing his email inbox. It's the same same storylines. But it's definitely slowed down, right? There's still the same number of founders, but there's less money going around. And so there's more folks knocking on the door of these angel investing groups. And so you can be more selective. And so whereas, a year or two ago, I'd say a couple of years ago, there was so much money going around that you had to get in quickly as an investor. You didn't have as much time to do due diligence, and now it's a much slower process, but I think that's a good thing. So you learn more about the company's financials, and anyway, I think it's cool. It's fun, but slower.
And how many companies are they investing in on a monthly basis?
Yeah, so one of the groups that I'm involved in, I don't know if I'm allowed to say it or not, but so one group is set up in a way. Well, you mentioned already the syndicate, which is, it sounds like a spy novel group. I think there was actually a group that was called the Syndicate, which was like the enemy of whatever in some show. That is led by oh my gosh, blanked on his name, Jason Kalaknis, right? That's the name. And he it's almost like a Shark Tank setup where founders do a pitch for 3 minutes each, and then you have some time to ask questions. I don't, but the other members of the syndicate, like the higher members of the syndicate, do. And then you get to vote as a member on your top 3, and then based on that, whoever kind of rises to the top, their team will do additional due diligence on the companies, and then figure out if they want to open up funding to it. So we get to be part of that funding process. So it's access to the stories, and then you choose whether or not you invest. Right? You don't have to. You're not obligated to invest in any way in these companies. So that had slowed down. It started to speed back up more recently. And another one I'm a part of, which I think is pretty cool, is it's a fund. There's no fee structure on the year to year, and I commit a certain amount of capital per year. That's fun because they pick the investment. They're compensated on the exit. So if it's an exit and they double the investment, then they take a percentage of that. But there's no annual fee structure. That's cool because I get to log in every quarter and see what they invest in. And they'll probably invest in, I don't know, 6 or 7 companies a quarter.
It's pretty good.
Across a broad spectrum. And you start to learn about pretty cool products that are coming out or technologies that are being brought to market that I normally wouldn't even see it all. I mean, it's pretty neat.
Now, you say 6 to 7 every quarter that they invest in? Has that slowed down over the past 12 months?
It has. It seems to be more selective now, right? Which to me is a good thing. So
yeah,
it'll be interesting to see how the companies from 2 years ago do from a total return perspective, for companies that capital is allocated to now. But as an investor going into it, you just assume you're going to lose everything. I mean, that's the reality. The hope is you hit a unicorn, right? Where that's like the 100x investment return. But that's just that's really, really rare. But the guys, I mean, Jason Kalaknis is really, he's really bright. And he obviously has a great track record on that sort of thing. One of his companies just got acquired that I'm invested in, which is kind of a cool process to see happen in real time. And that was a decent return. And that ended up being like a 3.3x return. But it's still invested. It's still private, right? So I can't sound like I'm getting a check for that amount. So your shares just kind of change hands, and it goes up quite a bit in value. So it's cool. It's fun.
You won't see any of that return until when? Until that company.
Yeah. So obviously, if it goes public, it means you've hit a home run, right? It means it's a large enough company that they can bring to market.
Yeah.
That's that unicorn thing, right?
Yeah. Let's say 5 years from now, they're still a private company. How do you actually see that return?
Yeah. So usually there's different fundraising going on in that time frame, right? A company's not going to just be happy and stagnant as a $100 million company. I know it sounds stupid, but that's the reality of how these things are, especially when there's outside investors.
Yep.
You want to see growth, right? And so when they have their Series B or C or whatever it ends up being, you usually have an option for liquidity at that point.
Gotcha.
Or the company gets acquired via cash, right? That would be liquidity. Or it gets, again, best case scenario is listing publicly, and you have public shares. At that point, you can decide what you want to do. It's just really neat seeing from the ground floor up. And I wouldn't advise it for people to do it because you're probably going to lose money. But if you're a curious person like myself, it's a neat process. What are you watching?
Right now, I am watching Full Swing docuseries on Netflix.
Yeah, how's that?
It's good. It's pretty neat to see all these top golfers, kind of like their personality behind the scenes. Like, and right now, like these golfers, it's such a tough sport to be good at for so long, which is why I have Tiger Woods back behind here, because he was like the #1 world ranking for like a decade or something crazy like that. Well, now it switches so often.
Right.
But
I see you're sponsored by Nike Golf too with that hat.
I had to go with it when my first background with Tiger Woods. But no, in all seriousness, just like going through the different players, and like right now, and I guess the last weekend, John Rahm is like now the new #1, but Scotty Scheffler, he was the #1 prior to that, and you kind of see his rise throughout the show. And somebody who's been struggling the last couple of years is Brooks Koepka. And you see, like, he was great for a number of years. Almost any tournament he entered, you thought he was going to win. And now it just seems like he's in his own head and can't get over the hump. So it's really interesting to watch the ebb and flow of these golfers and a little bit about themselves and their lives outside of just golf.
Gotcha. That's cool.
What about you? What are you watching?
Yeah, we finished The Patient, which is, I think it's on Hulu. Which is Steve Carell's a therapist who gets kidnapped by a serial killer, one of his patients. It's not a comedy; it's a series. And it's pretty good. He does a good job. We finished that, and then we're watching The Rest of Us, HBO. You watching that at all?
Nope.
That's the zombie apocalypse.
Oh yeah, I've heard of that.
Yeah,
good?
It's really good. I think it's good. Yeah. That gets released every week, a new episode. So it's